Welcome to the weekly close live here on the Passive Income Podcast. Joseph, probably not dividend boomer. How are you doing this week?
Probably not. Can't confirm. Pretty good, Dave. I was just telling Dave before we went live. Our system at work was down. I didn't clock in until 4:15. I just kind of sat and stared at my login screen all day. It was great, but I got paid. Well, I will get paid.
Yeah, nice. Well, I guess with that said, we might as well get into the closing numbers for the week. And of course, as always, while I take a minute pulling up the screen, you go ahead and talk about whatever you want to talk about.
I guess you know what. Now it's probably a good time to we've talked about this a little bit. This is at least the final episode, or at least the at least a hiatus of weekly close episodes featuring me.
Yes.
So this is episode 30, XXX.
I noticed that.
Everybody at home, that was not planned. It kind of just happened to work out. So for everyone who's joined us on the last more than 6 months of this, everyone who's subscribed, watched, liked, especially any of you who have joined in the chat, thanks.
Yes.
Much appreciated.
That's great. Okay. So, I'm not sure if it was last night or tonight, the first time ever closing over 23,000. So that's impressive, I guess. The five. Yeah, it looks like it went over 23,000 yesterday for the first time, all the way up to about 23,065, maybe the highest I see there, 69. So it looks like it may have closed Thursday. It looks like it did close Thursday above 23,000. Oh, it must have, because today was only plus 21. So yeah, it was quite a good week here in Canada on the Toronto Stock Exchange, starting Monday down at 22,333 and just green all week. And if I'm not mistaken, most markets have been green all week, right?
Oh yeah, it's kind of funny. Remember back to like a week, 2 weeks ago, when we were like, "Hey, what the heck is going on?"
Yeah,
because everything was so down.
Yep. This is taking. There we go. Took a few seconds to jump over to the S&P 500 closing the week back above 50. Let's get over to the big green week. It's been last week. Look at Monday morning. It was only 8. And then just
look at that
nice
jump
there.
I'll say that jump
Right
Wednesday closed to Thursday open, like a 50-point jump overnight.
Yeah, wow.
I love it. That's like on monkeypox news too, which bad news stocks go up, as we all know.
Right. Yeah. That's that monkeypox thing, the Sweden thing, where the first one outside of Africa. Is that right?
Oh, I don't know. I'm not that in the loop.
Yeah, okay. I might be way off base also. I don't know. So
we'll jump over Blind Luck Project
to the Dow.
He was the one who pointed out to me.
Okay. The Dow Jones Industrial Average closing the week above 40,000 again, 40,659, and another big green week. Like, look, Monday morning it was down 39,292 Monday morning, and then just up and to the right all week long, just what we like to see. Again, every single one of the markets, or all three that we've looked at so far, have had this nice little spike right here that Wednesday afternoon to Thursday morning. And am I gaining a little bit back here? The Canadian dollar? I mean,
looks like
at 73 cents, it's still pretty difficult. at 73
maybe not.
cents, it's still, yeah.
Go to the 1 month if you don't mind.
Sure. So we're back where we were a month ago, basically, right?
Okay. Yeah. You okay? I was wrong. You did claw a little bit back.
So from down here on August 5th, down at looks like it dropped below. Yeah, it did drop below 72, and like you said, clawed our way back a little bit. Crude oil having a tough week. We're still on the So crude oil closing the week on the New York Mercantile at 76.60. A lot of red there. And of course, Bitcoin never closes, and of course, Canadian dollars just to mess with everything. And 80,000.
I'll say quick hello to Emily Starr over on Kick. Thanks for joining in. Welcome.
Yes. Hello, Emily. Thank you for joining in. Exactly. Where was I? Bitcoin at 80,000 Canadian, which I believe it's around 58,000 US right now, something in that range.
Just crossed over 59.
Yeah. Okay. Gold, Jerry, gold. In closing the week at $2,546.20 per ounce.
And today, I believe it was. I think it was today. It might have been yesterday. Is the first time gold has ever gotten over 2,500 an ounce. First time ever.
Yeah, so it's had quite the run up here just in the 5-day, starting Monday morning at 24.70 or so.
I say in the year to date, gold's been on like the world's weirdest tear. And
let's take a look at that.
To go back to the chat, Emily, I'm doing pretty well. It's a Friday afternoon. Dave sounds a little under the weather. But I'm doing all right.
Yeah, no, I'm good. Sorry. I'm just, I don't know what, man. It's Friday afternoon. You're right. I'm happy to be here. So, okay. Gold. Yes. We're looking at the year to date, and back in January, just above 2,000. So in about 7.5 months, it's gained $500 an ounce. Out of curiosity, let's look at the 5-year too. Yeah, 5 years ago, it's gained $1,000 in 5 years, over 1,000.
Which is, I mean, what call it? That's nearing a 40-50% gain. Absolutely ridiculous.
All righty, where are we going next? I think we're going to skip the Russell this week. I'm not into it this week. Sorry, Russell. The Nasdaq. I'm still on the 5-year chart. Let's jump back over to the 5-day. Again, the same 5-day.
Tech stocks on the tear this week too. We'll get to it. I think it was Wednesday morning or Wednesday after close. Cisco reported, which threw some cold water on a lot of things. But
right.
I mean, it's kind of like everyone got together this week and said, "Hey, stocks are going to go up."
Yeah, it's like the same spike on Monday to Tuesday morning, and then again Wednesday to Thursday morning. These same two spikes on all the markets we've looked at so far. So,
and then Dave, what would you say that we do instead of streaming?
I'm
going back in the chat. What do we do instead of streaming?
Does Dave read these? Okay.
I was wondering how long that would take you to notice. I'm going to say make money, even though I think Dave and I are both. The online term for it would be wages.
Yeah, we're the 9-to-5ers.
Yeah.
Oh, okay. It's great to have people in the chat, though, even if one of them is you. Okay. Appreciate you being here, Emily. And the Nasdaq, the closing number for the week in USD, 17,631. And again, just impressive week in the markets. We'll quickly jump across the pond to the FTSE. It's kind of like it had that same spike on the, that's showing it Thursday and then Thursday afternoon. So around the same timing, I guess, right? When you consider the time zones. The FTSE closing the week.
He better.
Closing the week at 8,311 quid.
There it is.
Oh, can Dave give us a Tim? I thought you were gonna.
No,
I thought it was about the quid. Can Dave give us a Tim Hortons in North Carolina?
I mean, to be fair, it can be for both and the quid, but yeah, Dave, come on, pull. Actually, shout out Dividend Boomer. I think it was Boomer. I said I'd pull some strings for him regarding the Olympics. Yeah. The least you could do to repay our American hospitality is to get us a Tim Hortons.
I mean. You know what? I'll talk to newcomer investor. We'll talk to Boomer. We'll talk to a few people, pool some money together, and open up a franchise.
I mean, man, I saw Ryan Reynolds in your Twitter circles this week, so I mean, like, why not?
That's right, Ryan Reynolds. The Nikkei again. Everything just back to normal there. Akita over there after that whole thing there a week or two ago, where we thought it was ending because the Japan market crashed for a day.
The carry trade. Okay, I was about to say, what did I miss? No, okay, that makes sense.
That's right. And then, so yeah, the Japanese Nikkei closing the week at 38,062 Japanese yen. And of course, I always like to remind myself, if I'm poor in the United States, Europe, Canadian dollar closing the week. So that close live. All right, are we ready to get into earnings calls?
I was born ready, Dave.
All right, did that come up on the screen? Yeah, it sure did. So Monday, where are we at here? Well, gold right away.
Do you know what Barrick is? Because I didn't look them up because I've never heard of them.
Well, do you see their ticker symbol? GOLD?
I mean, yeah, they literally do production and sale of gold and copper. All right, so I mean, why not? Let's hit them real quick. Barrick Gold is up 13.52% this week. Earnings came in pretty good, 32 cents a share. Actual 27 cents a share estimated. I don't know the first thing about this company. Looks like they have a upcoming partnership that people like with the Panama government, which is pretty cool. But I mean, I think, we can pretty logically say it. We can make the conclusion that Barrick Gold as a gold company is benefiting from that record high gold price we were just talking about.
Exactly.
$2,500 an ounce. Oh my God.
Check out where is Barrick Gold's corporate headquarters.
Oh, okay. I can do that. It's Canadian, isn't it?
Toronto. Yeah. That's the only reason I would ask. So yeah, Barrick Gold is a little bit of a darling in the Canadian mining industry, and especially like you said, right now with the price of gold being astronomical, like highest ever. So of course they're benefiting from that, right?
Is mining a bit? I can't believe I've never asked you this, but I'm legitimately curious. Is mining a big industry in Canada?
Oh yeah, of course. Yeah. So actually, do you know what I found out this week is that, and shout out to World of Statistics, the very large Twitter X account. I found out that Canada no longer has any gold reserves. The only developed country that doesn't hold any gold reserves.
That just sounds wrong.
Yeah, it was something because I kind of looked it up too, and it was like apparently in 2022 we just got rid of all the gold reserves.
And you started 2022 with the 7th largest reserve in the world.
Yeah.
That's
insane, right?
Yeah, that is really weird.
I don't know. I don't recall that being any type of big news or anything, right? So, but to answer your question, yeah, in Canada, obviously mining is huge. Gold, nickel, copper, lithium. Actually, I think we have quite a bit of lithium deposits, which is going to obviously bode well for.
Oh, that's going to be huge.
Yeah, the EV market and all those lithium that's needed for batteries.
I was going to anything with batteries, which is every children's toy for one. Batteries not included.
That's right. Okay, moving on from Barrick Gold and the brief history of Canada's gold reserves and mining in Canada. Monday.com, Espiron,
So I want to hit Monday.
something in Japanese or Korean.
Yeah. I got to hit Monday, of course, because Dave, this is I think the third time you and I have talked about Monday.com in our time doing this pod, and I really want to shout out Monday because every time we've talked about them, they've done their earnings call Monday before open. So shout out to you guys sticking to the name and the branding.
Yeah, the consistency, right? The consistency.
Yeah. Monday.com up 21.5% this week. Absolutely ridiculous. And I don't really, there's not much to really say about, usually when we talk about a stock that's up a ridiculous amount, we're talking to somebody, that their future aspects look great, or they really closed this partnership. No, Monday just did the essentials and cleaned up with it. 94 cents a share actual over 56 cents a share estimated. At a company, Monday was only founded back in I think 2012. Yeah, 2012.
Mm-hmm.
So, they're a relatively young company, especially for a tech firm commanding a almost $13.2 billion market cap. Monday.
Mm-hmm.
So when you can beat earnings like that, $1 per share for a 12-year-old company is ridiculously profitable, even if it is a SaaS. What do you say other than they did the good work. They fought the good fight. They just cleaned up.
Am I still here?
You're still here.
Okay, you keep going. Talk about Barrick Gold or something.
All right, so I'm going to look up Asperion because you pointed that out. They're a therapeutic company. 373 million market cap. How'd they do this week? Up about 2%, respectable. But boys, they are not profitable. Negative 5 cents a share actual, negative 15 cents a share estimated. Oh, they're a pharmaceutical. I said therapeutic, but that's in the name. I guess kind of while Dave's talking, while Dave's doing whatever the heck he's got going on there. Monkeypox. Some of these, not investment advice, of course, but now might be the time to start looking at some of these pharmaceutical stocks. And I believe it's the Motley Fool has a phenomenal article on what you may want to be watching right now because monkeypox being an offshoot of smallpox, we have treatment for it. We have more or less a vaccine for it, similar to a smallpox vaccine. We could be very soon about to see a few of these penny stocks or under $15 a stock skyrocket, thanks to that now public health emergency declared by the World Health Organization.
Right. I'm sorry. Where are you? And do you want me to tell you what just happened?
Well, yes, I do. And I went to Asperion, which is a pharmaceutical company, who's up a little bit. And I kind of just started tangenting into pharmaceutical stocks that will do well with monkeypox.
Okay,
similar to Pfizer and Moderna did with COVID.
So what just happened there? As you know, before we went live, I had to unplug and plug back in my mic cable to get sound, and so it moved the cable onto the floor, and my little robot vacuum cleaner has been spinning around, and it decided to get to the wire and try to. So I was like, whoa.
He just wanted love.
Yeah, exactly right. Ballard Power. I think that's another Canadian company, if I'm not mistaken.
I will look it up, but I've never heard of them.
Ticker symbol BLDP.
Found Burnaby, British Columbia.
Yeah, that would be Canadian.
Yeah, I would hope so at least.
Yeah.
Negative 11 cents a share, actual negative 13 cents a share estimated, up about 1.5%, 2% this week.
So they lost.
They're still up, and they're just not profitable.
Yeah, that's what I mean. They beat earnings, but they're not profitable. We can move on then. Orla Mining, another mining stock. We're still on Monday morning, so do we want to start skipping ahead a little bit?
I am ready to skip to Monday after close.
Yeah, I see another Canadian company there, Sun Life, down near the bottom. But what do you have on top?
The only one that I really wanted to hit for this was actually Rumble.
Right.
Which, for anyone not familiar, Rumble is I believe a streaming platform similar to Twitch, but they also do video hosting similar to YouTube.
Right.
So I don't know if I've ever been on Rumble's site, so please excuse my lack of familiarity is how I'm going to word this.
Mhm.
Stock's up 9.6% this week. They're not profitable. Negative 13 cents a share actual, negative 15 cents a share estimated. What I was bringing him up. I was watching shout out CoffeeZilla. I was watching one of his videos this morning, yesterday. I work from home. I watch YouTube like 40 hours a week. It's great. But I was watching one of his videos, and he was talking about a few Rumble streamers and a few Rumble like content creators who were getting to sign on deals similar to like Twitch streamers will and like YouTube, especially when they were doing their live streaming. Man, they're between the IPO, which was only back in, so they IPO'd back in 2021. And between the IPO and the money they got from that, as well as the money they got from a lot of like investors and stakeholders, man, some of these deals they're giving streamers and like content creators. Like, I'm not gonna name the guy because I do think he's banned from YouTube, who CoffeeZilla was talking to.
Mm-hmm.
But the dude mentioned he was making $400,000 a month for one 20-minute video a week.
Wow.
So that's all to say, Rumble, I don't know the first thing about you or your company, and I've never been on your website, but if you want to throw $400,000 a month at me and Dave, we'll split it. We don't care.
Exactly.
We'll do a multiple hour podcast 3 times a week even.
Yes, I would not argue with that.
With that kind of money, Dave, I think we could pay an editor.
We could
pay an editor, too, to edit it down to shorter form.
Yeah, exactly.
We'd make it happen.
Exactly. Like I said, the only other thing there to mention on Monday afternoon, Sun Life is a Canadian insurance company. It's one of the big ones. It's in the Canadian financials, so up there with the Canadian banks, so to speak, right? But we can just move right along to Tuesday because I see we're already doing what we do and just talking and talking and talking.
We're doing way better than we have before.
Before open on Tuesday, the big one obviously there is Home Depot.
See, I'm actually going to start above you on that. We're going to talk about on holding. ON.
Okay.
So for anybody at home who doesn't know what on holding was, such as I didn't Tuesday morning, they do high-end like footwear, apparel, and other stuff for sports. I think specifically like running and like hiking. They're Switzerland-based. Zurich, if I remember correctly, because one of their cities are there in Switzerland. So no, Dave, we do this to get the Swiss people mad so they comment.
Davos, I don't know.
No, it's not real.
There's at least 3 cities in Switzerland, guaranteed.
But I don't know if this is either way. Back to we've talked a lot over the last like 2 or 3 months about a lot of your like high-end stores, and like the one that I remember. We talked a lot about them, but the one that comes to mind, and the only reason this one comes to mind is because how much you and I, how much you laughed at it. I'm not going to let you bring me down to your level. Was Victoria's Secret, and how they even quoted in their earnings call, which was not that long ago, like within the last 4 to 6 weeks, was one of the reasons their business is hurting is because Americans, specifically with the fear of an upcoming recession, are not willing to pay for higher end products right now.
Right.
But then you come over to On Holding, up 9% this week because they blew past sales numbers. Well, really, they blew past revenue numbers. 18 cents a share estimated, came in at 15 cents a share actual. But, I mean, the future's looking bright. Like, your stock doesn't go up 9% on maybe, maybe what was I going to say? Maybe we cut sales next quarter, but I mean sales were up 28% from Q2 in 2023, and net revenue was up pretty significantly, pushing like 10% from the same quarter. Profit margins grew by 0.7%. It doesn't follow the trend that we've seen and we've talked several times in these higher end retail products. So I guess the question is, Dave, have we achieved a soft landing?
Oh. I don't know.
Our recession fears, because like also we go into Bank of America released this week their official report that the U.S. is no longer heading for a recession, saying that the American consumer is strong.
Okay.
Were they
So
right?
I guess to answer your question, all I can say is maybe there's been a soft landing. I'm not going to commit one way or the other to answering that question. I'm sorry.
I know, and that I mean, for the record, especially with neither you, Dave and I we have our 9 to 5. Like I mentioned earlier, we're wages.
Yeah.
Neither of us. There's a reason we do this for free. Neither of us is paying. Nobody is paying either of us for economic analysis.
Yeah, exactly right. We're just two guys having a chat on a Friday afternoon.
Amen to that.
Okay, Home Depot.
Yes, sir. Home Depot stock up 4.41% this week. Surprise, surprise. Home Depot beats earnings. 4.67 actual, 4.5 estimated. I mean, it's Home Depot, man.
Yeah.
Like it's a blue chip, and especially one thing I thought was interesting was the Biden administration announced. Maybe it's the Biden administration. Maybe it was one of the candidates on the trail announced their plan to, across the U.S., increase home building, especially like to suit first-time home buyers. But like that seems to be like a common thing across party lines. That in the U.S. we need to build more homes to reach more affordability and like help more first owners. And you know who benefits when we build more homes? The
Home
building
Depot,
materials store,
Lowe's, the hardware stores, even the mom and pop shops where you're running in to grab some nails and screws and whatever else, right? Some 2x4s. So yeah, and it's the same here in Canada. They want to build literally millions of more homes, and well, yeah, you need building material to do that. Where do you get it? Home Depot, Lowe's, and
I haven't announced this yet, but is now a Lowe's certified pro. I can talk about this with which, by the way, Dave, you know how you become a Lowe's certified pro?
Go to the contractor desk and sign up.
Okay, yes, but there you have to have like an EIN and a business ID to do that. But you know the other way to do it?
No, I don't.
You spend more than $5,000 there within 90 days, 3 years in a row. Welcome to real estate, boys.
Yeah.
I have spent several $1,000s at my local Lowe's over the last 3 years. Home ownership ain't for the weak.
No.
And that's just what I spent at Lowe's. Let's talk about the other home projects that I didn't go to Lowe's for.
Right. Yeah. No, it's astronomical what you end up spending, right?
I was telling you, if you have a home project that you want to fix, or something you want to fix, something you want to do, whatever you think is a reasonable cost, double it, and now you have the contractor estimate. Double it again, and that's what you should expect to spend.
Yeah. I would say maybe just add on 50% to the contractor's estimate.
Safe bet.
Yeah, it's a safe bet. Anything more for Tuesday morning?
I want to hit PaySafe, not for anything really, just because I've got some boys that work there. Shout out my homies over at PaySafe. Dude, I also want to say PaySafe is a relatively young company, 1996 founded. But they've been really growing, especially here in the U.S. They have a huge office in Jacksonville, Florida, which is where I know these people from. Man, PaySafe has been paying their employees with employee stock ownership. Insane. Like I've got friends who work there with like 4,000 or 5,000 shares that have never put a penny into it. That's what they just get gifted every year. But I want to shout out to all of you. You guys got a huge boost to the net worth this week. Your stock's up 15%.
Yeah, that's good for them.
59 cents a share actual, over 8 cents a share estimated.
Holy what?
Yeah, man, we're talking like an over 700% beat on this.
Wow.
Which is like kind of crazy because like if you look at the earnings chart for PaySafe, man, they keep getting sold short. because they've been consistently profitable. I mean, this 59 cents a share is pretty in line where they've been for the last almost 2 years now. But the markets keep expecting them to hit like under 10 cents a share. And I don't know, maybe this is like the markets just need to catch up. Maybe at some point PaySafe is going to fall flat on its face, and the markets were right this whole time. This is just like some big, I don't want to say Ponzi scheme because it sounds like they're doing something, but like, it's all a ruse.
Yeah.
But again, just shout out. I don't know if you guys watch this or not, but shout out my homies at PaySafe. And that means next time we go out, dinner and drinks are on you.
Yeah, exactly, right? Okay, Tuesday after close, we're getting through here.
I really don't have anything actually for after close. Nothing really. I mean,
What Franco, Nevada? What's look that one up quick. That one is familiar to me, and I'm not sure why. I think is that another mining company?
we're gonna
Is it
find
another
out.
Canadian mining company?
They're out of Toronto, and they are they manage gold. It doesn't say that they're a miner, but it does say they deal primarily with gold.
Yeah, so they're in some way related to the mining sector.
Yes.
All right.
That's a fair statement.
Well, then, with that said, we'll jump over to Wednesday. Ooh, I suddenly have a craving for a pineapple and a banana.
So we're gonna. So you know what? I like that. Let's talk Dole. I like Dole, and you know what? Real quick, shout out Disneyland with the Dole Whip. You guys overhype it, but it's pretty good.
I don't know what that is.
It's basically ice cream made out of pineapple.
Oh,
produced by the Dole Corporation. Here, can I drop a link in the chat? But if you go to like the Disney parks, it's fresh.
Right.
It's not like frozen. Supposedly, it's not like frozen or anything. Supposedly, it's basically soft serve made out of like just the pineapple.
Nice.
It's pretty good, but all you Californians overhype it.
Right.
And now that I've started enough fights to really get the comments on this going, let's hit Dole. 5.37 up this week. 49 cents a share actual, 43 cents a share estimated. This is another. I mean, I'm going to roll this one in with Home Depot. It's definitely not like the blue chip that Home Depot is. I say as the stock's up 25% this year. And Dave, did you know that Dole only IPO'd in 2021? Because I didn't know that.
No, because I mean they've been around for decades, right?
That's what I thought.
Well, I'm sure they must. Were they just like a family-run company for 50 or 60 years or something?
I guess.
Yeah.
I don't know, but I mean, but either that said, it's Dole. They do the fruit. What do you say about? I mean, when we can have the whole talk about like, oh, pineapple demand is down, but like, it's Dole.
Yeah.
Go to the grocery store. They're there. I promise.
Exactly. Sorry, the RoboVac decided to just be around me this whole time. I kind of thought it might just go to another room, go away, go somewhere, but it's just spinning around my feet this whole time.
Dave, it obviously it's gained sentience.
Yeah,
and it wants attention.
That's
because that sounds like what my dog does while we do this podcast. And you know what? They didn't report earnings this week. I don't know when did they report earnings? You know what? We didn't talk about them. Let's see here. What was the date of this? Nope, not images. I need news. Okay, so this was wow. Like, okay? So we know it. We skipped him last week. Let's hit it while Dave's talking about his Roomba. iRobot up 5.73% this week. I don't know when they reported, but I'm ad hocking because Dave's gonna kick me off the pod after this. Dave, do you realize this is why he's following you around? He wants money. Dave, do you know how wildly unprofitable iRobot is?
No, I do not.
They are losing. That last quarter, they lost $1.96 a share.
Oh, Thank you in the chat. My Dividend Dreams Dole was founded in 1851 in Hawaii.
The homies in the chat always got us.
Yeah.
So yeah, they lost almost $2 a share last quarter over the $1.75 a share they were expected to lose.
Sorry,
So,
you're back on iRobot.
Yeah, I'm still on iRobot. So Dave, we now know why your Roomba's following you. He just wants money.
This actually the brand name is called iLife, that's the model of it. I have no idea. It's just it was like I just bought it on Amazon. So
we could talk about them too. They're not public, but I've got their Crunchbase.
sure.
Let's see. Where are they at with funding? They're a for-profit company founded in 2007. They're out of China, actually. Let's see what we got. They've done one round of funding of convertible notes, which is super interesting. They were funded. It looks like a pretty large amount of money, but it won't tell me how much, by a company called Plug and Play, who is also not publicly traded. All right, well, we should probably get back to who actually reported this week.
Yeah, well, back to Dole. Founded 1851 in Hawaii. That's 170 years, and then they decide to go public 170 years later.
Dude, access to public debt markets is a strong motivator. That's all I got. But yeah, I mean, it's Dole.
Yeah.
They're going to sell the pineapple. You're going to buy the bananas.
Yeah. Anything more before open on Wednesday? We've got Public Square, MediWound, UBS, UCloud Link.
I'm ready to yell at Cisco.
Okay, we'll get right into after close on Wednesday and Cisco, not the food delivery company Cisco, the other Cisco.
So let's just start with the fun part of Cisco. Cisco actually talking pretty good this week, up a little more than 7.5%, 7.64 to be exact. Year to date, Cisco is down almost 2.5%. Over the last year, Cisco is down 7.2%. Over the last 5 years, Cisco is down 5.61%. Dave, when was Cisco's all-time high? Let's have a pop quiz here.
So what's it trading at right now?
Today it closed at $49.34 a share.
So I'm guessing the all-time high was much higher than that.
A little less than double.
Yeah. Oh, less than double. Because you said 49. I was going to guess like 150 or something.
Oh no. They never.
So
they
less
never
than double is in the 90s.
High 70s.
Okay. So what's going on there with at one point you were a $78 stock and now you're a $49 stock? What happened?
Well, that $78, $79 a share came March 31st, 2000.
24 years ago.
At that point, Cisco has never, they've topped $60 a share very briefly back in late 2021, but they've never hit $70 a share ever again. And they've only hit 60 once. Cisco is still down, about 25%, give or take. Actually, a little more than 25%, 27, 28, give or take, from its pre-dot-com bubble burst.
Okay.
So, we've talked about Cisco 2 or 3 times now. On one end, it's Cisco. You got that 3.5, I don't remember off the top of my head, I didn't write it down, percent dividend yield. You're not getting capital gains out of it, though. You kind of, if you expect capital gains out of Cisco, DM me on Twitter because we need to have a little talk. At Dividend Boomer, by the way.
Yeah. It's actually at Boomer Dividends.
See, that's why I'm probably not Dividend Boomer. I can't even get the name right. So, Cisco, 87 cents a share actual, 85 cents a share estimated. Again, I like to compare the last 2 times we talked about Cisco. I like to compare it to Canadian banks because they're going to make their money and they're going to go away. But it's so crazy. The stock is still nowhere near its high 24 years ago, despite it being an arguably pretty solid company. But one thing I wanted to bring up was we brought this up a lot back in like January, February. For the market has been rewarding layoffs. And
Right.
Cisco, with this earnings call, announced their second round of layoffs in 2024, laying off another, I want to say it's either 7 or 8% of their total workforce.
Look who joined the chat.
I definitely am a boomer. I talk about this a lot. My wife has 2 teenage sisters, and they'll call me every now and then and start dropping like the TikTok lingo and things and all that. And I'm like, oh yeah, I'm like 90. I'm not even a boomer. Just put me in the put me in the nursing home. I'm done.
The silent generation.
Really though, because like they'll come on that or they'll call me, and they'll be like, "Hey, do you know so and so?" And I'll be like, "No, I have no idea who that is." And I'll be like, "They have 2 million followers on TikTok," and I'll be like, "Oh, that's great."
Yeah.
No clue still. And I'm just like, again, put me in the nursing home. It's over. I tried.
Yeah. Okay. Are you done yelling at Cisco?
Yeah, but I also do want to move on to ASTS.
Okay. Space Mobile.
Yeah. Dave, stock's up 51% this week.
That sounds good.
Yeah, which is crazy when I'm going to have to read you this number. So, Dave, they were expected to lose 22 cents a share this quarter. How much money do you think they lost instead?
Hold on. They were expected to lose 22 cents, but they're up 50%.
Yeah, they lost 51 cents a share.
How do you lose that much more and then your stock still goes up?
Bro, that's a great question. You know that? That's why we're here. That's why we have this podcast. Because let me tell you, I read so many articles. I enlisted Google Gemini to help me out, and Gemini couldn't help either. Let's start. Space Mobile does something pretty cool. They do like low Earth satellites, specifically for like mobile broadband networks and like telecoms. Pretty cool. But like, man, they're losing money hand over fist, which like on one side, company was only founded in 2017. If they're already putting stuff into space and getting these big contracts after only 7 years of existence, that's pretty cool.
They're
give
doing
it
something
to them.
right. Yeah.
Oh, without a doubt.
But again, how do you like not beat the estimate and your stock rises 50% or whatever you said? Like that's the stock market just doesn't make sense. It just
it doesn't. And they're getting limelighted over at like Motley Fool, Zacks, even the Wall Street Journal. And okay, so we got to go beyond numbers. So like, if you look at like, let's back up. AST Space Mobile. I don't know what AST stands for. A super terrific space mobile. That's what I'm going to assume AST stands for.
Yeah.
They've got a pretty good backing for a 7-year-old company. They've already got contracts with AT&T and Verizon. They've already got supposedly their CEO and management team is highly rated. I don't know the first thing about them, but that's what Motley Fool said, I think. And they're in a weirdly like underserved market for what it is. So we look at what actually got them up. They announced for the first time ever they're about to do their first satellite launch.
Okay.
Come next month, early September.
Okay.
They're going to do their first ever satellite launch, which I guess is kind of crazy to me for a company been around 7 years, and then you're kind of just getting around to that. But I'll be the first to tell you, I don't know the first thing about space travel or putting things in space.
Yeah, I'm sure it takes some effort to just you don't just go out in your backyard and
no. No, definitely not.
That launches a satellite into orbit. So
I guess I look at this jump, and Dave, you feel free to ask, go on this. Are we looking at the company as their current fundamentals? Is this just a huge risky bet, or is this a proof of concept on something that could very soon work?
Well, it's both, right? If they're once they launch this satellite, like you said, after 7 years, then it's the proof of concept or proven concept. But it's still, even after you launch one, it's still risky because, I mean, look at all the things that can go wrong launching things into space. Like, I mean, it's taken SpaceX how many years? And I mean, they still have the mishaps as well, right?
Yeah, no, I mean without a doubt, and I guess lucky, awesome, super terrific over here. That's what it stands for. Nobody can tell me wrong. Otherwise, um, I mean they're in good space. Like their nearest publicly traded direct competitor that we can look at, I would probably be Virgin Galactic Holdings, ticker space SPCE, who is losing an even more impressive amount of money. Last quarter, Q2 2024, Space lost $4.36 a share.
Wow.
Which is even crazier when you look at their last year chart. They're 50, again, going back to Space, their 52-week high is $50.80 a share. They're trading at about $6.50 a share right now, Space, that is.
Ooh.
Crazy. And that's a SPAC.
Wow.
But again, so maybe AST's doing well because if we're calling that their closest publicly traded competitor, they're kicking ass and they're taking names. But does that matter? I mean, do your farts stink worse than mine? At the end of the day, they're both farts,
Oh, do you have anything more for Wednesday after close?
I do not, and that's a great place to cut me off.
Yeah, exactly. Oh, Thursday morning, Alibaba, Walmart, big one, John Deere. Looks like a lot happened there on Thursday. Where are we starting Thursday before open?
We got to hit good old finance philosopher's favorite stock ever, Alibaba. If you don't get that joke, please, everyone go follow Finance Philosopher. He is one of my favorite accounts on the platform. So Chinese Amazon hit $2.26 a share, actual $2.13 estimated. So we're gonna call that a pretty nice little earnings beat, about 5%, 6 maybe, up about 3.5% this week. So a lot of analysts, mixed earnings overall. Let's start there. Mixed earnings, mixed kind of looking forward. And I'd like to hear your thoughts on this as well, Dave. So Alibaba right now, especially being a Chinese-based e-commerce, they're terrified of Temu.
Why?
Bro, have you seen how much market share Temu is gaining so fast?
Well, like everyone else, I see their ads on X all day, every day. But it's my understanding that everything that they sell is junk.
Oh, and let me tell you, I've had multiple people tell me to my face, everything you get off of Temu is trash, but you can buy so much of it. There is one person specifically that I know. There's this on Temu. There's this little remote controlled car. It's $25. He is on his 7th one because they keep breaking after 2 uses. And in his mind, it's $7. Why not just keep buying more? And I'm like, sir, you're $175 into this. Just go buy a nice one. But
yeah, $25 each, not $7 each.
Yeah, that's kind of like Temu knows what it is. That's where the mindset of shop like a billionaire comes in. Literally, they're like corporate slogan. It's working. And Alibaba is terrified of them right now, and they're losing market share to them quickly, like crazy. The problem is that then you look at Temu's not profitable. A lot of that because they're spending an ungodly amount of money on marketing.
Yeah, and the advertising that you see.
Yeah, they're losing as much as $7 USD per order on that app right now. Depending on what you buy, of course. But should Alibaba be scared? Analysts say probably not. I mean, they're a strong buy over at Zacks. And TipRanks also gives them a 13 out of 14 strong buy.
Yeah, I would say honestly, it's Amazon. Just go with what you know, and go with where you can get the good quality products. And like you said, yeah, maybe you're going to pay a little bit more for it, but why buy 7 at 175? It's about to be 8 to make it 200. Well, why not just buy that on Amazon for the 175 in the first place?
Well, I mean, Amazon and Alibaba are different companies. Alibaba is just.
I'm well aware.
I was going to say, I mean, Alibaba still isn't exactly quality either. They're just slightly better and slightly more expensive Temu.
Well, and on Alibaba, I mean, I don't have any verifiable proof, but there's probably a lot of knockoffs when they're like, oh,
Oh,
you can get
without a doubt.
10 Milwaukee drills for $100, and you're like, that doesn't sound right.
Yeah, 2 Milwaukee, you know.
Yeah.
Yeah. So that said, let's move on to good old American company. Let's go to Walmart.
Yeah. What?
I gave Walmart my money today, which is code for my wife went grocery shopping.
Yeah.
At Sam's Club.
That's where I do the majority of my grocery shopping as well, and yeah. So
I mean, they've done well. 67 cents a share actual, 64 cents a share estimated. Stock's up 8% this week, which is ridiculous for a company like Walmart, especially like a company who's so heavily into their dividend, like Walmart is. And I mean, we go back to the Dole argument here, which is another weird comparison. But Dave, what do you say? Sales were up 4.8% year over year, 5% if you don't account for inflation.
Right.
Outlook was raised for the rest of the year. I mean, it's Walmart. Yeah, they're going to make a lot of money. They're going to issue that dividend, and then they're going to go home. I mean, that's it. I will say, Sam Walton would be proud of this earnings call.
Yeah. Actually, another shout out to Mistress Divvy. She had a great tweet today. You know how she does the analysis tweets, and Walmart was one of her analysis tweets today. So check that out if you can find that. It was actually a SWOT analysis: strengths, weaknesses, opportunities, and threats. And yeah, basically mentioned the same thing that you mentioned on the strengths of just like world's largest retailer.
Oh yeah, it's why, and and they have that base. I mean, they've been leaning a lot more, like you and I talked about, like the target method, I guess to say, of consumer discretionary purchases, which are driving growth, and also, I mean, they're higher profit margin, but also they've got a huge grocery segment, plus Sam's Club, plus the neighborhood markets. That, I mean, it's got to be one of the most recession-proof stocks on the market. Like, as long as people are buying food, Walmart's beating earnings.
Yeah. Yeah, and I mean, yeah.
Not investment advice.
People are still buying food no matter what, right? Like,
oh yeah,
you have to do it.
No, say last I checked, I plan to eat most days whether the stocks are up or down.
Yeah, exactly. My stomach doesn't care if there's a recession or a soft landing, or if the market's red or green or anything like that.
Yes, exactly. And with that, let's move on to a company that Dave might be a tech company.
John Deere.
John Deere.
It's becoming a tech company.
I think we're a little past the term becoming. John Deere, at this point, borderline just is. And shout out John May, John Deere CEO. I don't remember when he took over, but I think he's been a lot of the driving force of this. Let's see if I can look that up. How long has he been the CEO? Here is his LinkedIn. Whenever it decides to load. Yeah. Come on, LinkedIn. Come on. Oh, okay. So never mind. I take it back. He's just okay. He took over as CEO in 2019, November 2019.
Yeah. So 5 years.
Yeah. See, and he's been with the company for 27 and a half now. But he's been the one leading a lot of this. And I mean, it's hard to argue that it's not working. Stock's up 145% in the last 5 years. Is up 8.25% in the last week. We're talking about a company, Dave. John Deere was founded in 1837.
Right.
This is an almost 200-year-old tractor company, basically. Is what they are.
Yeah.
Which is you shouldn't be getting 145 in 5 years from a tractor company. You just shouldn't. Which, I mean, like you can see from there, like when they crashed back in 2020 due to the COVID crash. They're just, they crashed at their low was about $138 a share. Well, today they're pushing $388. Like we're talking 200-300+% growth in that time.
Wow.
It since John May took over, it's been up to the right. Like I have some complaints about the guy and some of his policies on a personal level, but it's working. You cannot argue with how well, from a business standpoint, it's working. EPS 629 a share actual over 577 expected. Dave, I don't know what to expect with John Deere anymore because again, this is a stock that I expect to be the same thing as Walmart. You pay the dividend, you go home, you live your life.
Yeah,
It's like you literally have a money printer. You don't need to do anything new. Just add a new AC unit to the tractor every 2 or 3 years, and just keep cashing the checks.
Yeah, so I think maybe we should just explain why we're considering it to be a tech company. And I mean, obviously, it is still a tractor company, a heavy equipment company. It makes excavators and skid steers and every other type of heavy equipment. Like you said, it started nearly 200 years ago as basically a tractor company. And they obviously still make tractors too. But I think the point of it now being what we call a tech company is there's just so much technology that goes into these machines. It's not just it's not just some gearboxes and a clutch and some hydraulics.
Which it used to be. I mean, to be fair, there is nothing wrong with John Deere's gearbox or clutch, but like the amount of like whether you want to call them a tech firm or not, John Deere's a data company at this point. Like the sensors and the data collection and the sheer data analytics that goes into every single machine on the lot between GPS, again, the sensors for data points, and also optimization and accuracy trackers, along with fertilizer and pesticide tracker.
Yeah, that's what I was thinking.
It's insane.
The crop management that these tractors have the ability to do now. So like farmers in like Saskatchewan here in Canada and then obviously Nebraska and the Midwest and all those like farming states, the prairies and the plains of Canada and the US. And it's like these farmers out there that are managing literally thousands of acres. And now they're relying on the technology of these companies like John Deere.
And let's also say here with John Deere, I don't know if anyone else does this, but I know for a fact John Deere does. They are using a software as a service model, a SaaS model. These sensors aren't free. Like, they come with the tractor, but they don't come with the tractor.
Yeah.
Like you have to pay John Deere for this, but I mean, with the amount of like a good farmer, I would think can look at a field and say, oh, over there is a little underwatered. But, compare that to a GPS tracker that can say these fields are underwater and these need more pesticide. And this will increase your overall crop yield by 6% if you follow these,
Yeah.
Like you are literally falling behind, especially in like today's modern world when a lot of farming, a lot of profit is built on futures contracts. You can't afford to miss that futures contract or you're kind of screwed, So they've made the data that they can provide at this point a borderline must have.
Yeah. All right, I think that's enough of a love fest for John Deere.
Shout out Joe Diffie.
Joe Diffie.
He is a country singer with one of his hit songs being John Deere Green.
Oh, okay. All right, fair enough. Anything else before open on Thursday, or are we getting into after close?
I don't really have anything for after close. I mean, I'll talk AMAT. I'll give AMAT a love festival too. Nowhere near as much. I don't know near as much about AMAT.
Applied Materials.
Yeah. Up 8.6% this week. Another manufacturer, but also they've been working a lot with a lot of semiconductor companies, which means, Dave, they get to use the magical letters. Every stock goes up if you just say AI.
Right.
I say that as AMAT's up almost 30% year to date. 212 a share actual, 202 a share expected. Let's see. I did not look into AMAT at all, so you're kind of getting me live in the research phase here. Let's see here. Revenue is $6.78 billion, which does beat analyst estimates by just a little bit. JP Morgan's new price target is $250. Let's see here. CJ Muse's new price target is $250. Goldman's price target is 240, which is all. Still as much as let's see here, 25% growth from where they are right now. And yeah, kind of what makes them worried, I guess, looking forward is that softer revenue in China, which also hurts Q4 guidance, but they say it could be positioned well to retake the Chinese market in 2025. I don't know why. That's just what this article says. Thanks, Bazinga.
Fair enough. Anything else catch your eye there after close on Thursday?
If it were tax season, I'd say H&R Block, but I think at this point we know that they're just living off that high.
Right. All righty. Not much happened this morning before open, and of course, never any calls after close on Friday. So I don't know if you have anything for any of these three.
I didn't research anything. We'll hit Flowers Foods. Why not? Stocks up. Oh God, 0.69% this week. Get it out.
0.69, like
0.69.
Okay.
Get it out. 36 cents a share actual, 33 cents a share estimated. I didn't really. This is they do the Nature's Own products along with the Dave's Killer Bread, Wonder Bread, Sunbeam Bread, a lot of breads, a lot of baked products. I never knew this. Flower Foods, founded in 1919 in Thomasville, Georgia. Stock is up 1.38% year to date, down a little in the past year, and by down a little, I mean 9%.
Please tell me that it is now trading at $4.20 a share to go with that point. To go with that 0.69%.
Unfortunately, 22.71. But yeah, I guess as long as the keto diet doesn't explode, Flower Foods is looking pretty good because I mean, man, they have really cornered so much of the bread aisle.
Right. Okay. Is that it?
Yeah, that's it.
Okay, well, that might be it for a while for the two of us here on the Weekly Close Live.
Unfortunately, I think it may be.
All right. Well, I see you're enjoying the pool.
Dave got for real OG's been listening since day one. Dave did buy me one last pool this week with the multiple six figures we're going to make off that Rumble deal.
That's right. Yeah. Shout out to Rumble for sure.
God, okay. I hope they're not like a terrible company or something that they kill puppies on the side or something. We've been shouting them out, and I know literally nothing about them.
Okay, fair enough. Again, thank you so much for your time. Thank you so much for doing this with me for 30 episodes.
Amen.
And
it's been a good time.
We, like I said, this may just be a hiatus. We'll see if we ever fire this back up again. But for right now, we are semi-permanently signing off for the Weekly Close Live. Thanks for watching, everyone. And if you're still here and watching on YouTube, hit that subscribe button. If you're watching on any of the other platforms, be sure to hit follow. And again, thank you so much for your time and doing this with me for all these weeks and months, Joseph. And we'll catch you the next time, I guess, if there is a next time.
Well, the future will